In my last video, I broke down the rental income versus expenses for one of my short-term rental properties here in Hawaii, and I gave a summary of how the investment has performed for me so far. Well, I couldn't help but notice a few comments from people who insisted that buying stocks would have been a much better investment than the real estate that I purchased. And in addition to that, I've noticed a lot of finance YouTubers have created videos discussing their thoughts on the stocks versus real estate debate. So far, I think just about all the videos that I've watched have concluded that stocks are a much better investment in this market, with some very popular YouTubers like Graham Stephan actually selling out all of his real estate portfolios in favor of other investments. And that's a bit surprising because Graham actually started his investment journey in real estate. But to be fair, I think that some of Graham's reason for selling all of his real estate was more specific to his California location. But nonetheless, it seems that the popular trend is for investors to prefer stocks instead of real estate in this market. So in this video, I'd like to give you my unique take on the stocks versus real estate debate. Now, of course, I do have to disclose that I'm not a financial advisor and I am a real estate broker, so I'm sure I'm a bit biased. But in addition to my real estate investments that I've covered in detail on this channel, I've had a lot of success investing in other asset classes as well, including stocks. In fact, over the past 2 years, my stock portfolio has massively outperformed the S&P 500, and it has certainly outperformed my real estate investment during that same time period. This is a performance chart from my E-Trade account showing that I'm actually up 270% over the past 2 years. The purple line is my performance, while the orange line is the S&P 500, which is also up more than 43% in the past 2 years. Now, I'm not telling you this just to brag, but rather to demonstrate that I fully recognize the power and potential of investing in the stock market. With that being said, though, I think anyone who insists that real estate is no longer a good investment is completely missing the point. Of course, timing is critical because the returns on my real estate investments massively outperformed the stock market between the years 2018 and 2023. And now, the stock market is at all-time highs, while some real estate, especially here on Maui, is down as much as 40% from the peak. So while everyone is piling into the stock market right now, real estate is mostly being overlooked by investors. Now, to be clear, I do think there's more room for growth in the stock market in the near term. But I also believe the old Warren Buffett quote is true when he says that we should be fearful when others are greedy and greedy when others are fearful. And it's clear that the stock market is starting to lean towards greed, and a lot of people are fearful of real estate investing in this market. And speaking of Warren Buffett, his company Berkshire Hathaway just struck a deal to acquire homebuilder Taylor Morrison Home Corp for $6.8 billion. Essentially, Berkshire Hathaway, who's been stockpiling cash for years, is now betting on a real estate market recovery. So here's what I'm doing with my investments. I'm not going all in on one thing. I'm conscientiously remaining diversified in several asset classes, and I intend to continue investing in both stocks and real estate. And if you're an investor, I do think it's important to pay attention to how concentrated your overall portfolio is across all the different asset classes. So one thing that I've done for myself is I built out a wealth dashboard using artificial intelligence. And here it is. It only took me about an hour chatting with Claude and uploading statements to build out this tool. Now, I did set my dashboard up with a couple of different tabs. One for my private use where I can see the actual dollar amounts for each asset so I can track my overall net worth. And this one that only shows my current percentage of concentration in each asset class so I can share it with you on this video without giving away too much of my personal information. As you can see, my net worth is heavily concentrated in real estate equity at almost 70%. 17% is held in my stock portfolio. I have 8.5% in cash and savings. I do have a very small amount held in physical gold and silver with about 3% in precious metals and around 1.5% in cryptocurrency. And now that I'm able to easily visualize my concentrations, it helps me with planning my future investments And over time, I would like to see some of the real estate equity go into other categories. So that's my scenario, but your scenario could be very different. And it might make more sense for you to go in a different direction depending on where you are currently in your investment journey. Of course, there are obvious pros and cons to each asset class.
For example, with real estate, you can use leverage, which basically means you can get a mortgage to control a large asset with a fraction of the cash down payment. And if it's a rental property, the tenants are paying down your loan. Real estate also offers tax advantages. Depreciation shelters like 1031 exchanges can defer gains indefinitely. And of course, there's the STR/cost segregation strategies that can be aggressive if structured correctly. I'll talk more about the tax advantages of real estate investing in future videos because it is a big part of the equation that most people miss. Now, a con of real estate is that it's not as passive as stocks, but one of the benefits of it not being passive is that you can force market appreciation and you can create value by renovation, rezoning, or just by better management. So you don't have to just wait for the market like you do with stocks because, of course, with stocks, you don't have any control over the companies that you invest in. And of course, real estate is a physical asset that you can use yourself, which also has its benefits. For beginning real estate investors, I do think that using a low down payment loan to purchase a primary residence that is suitable for house hacking is the best way to start building wealth. Now, moving on to stocks. The benefits of stocks are the liquidity. It sells in seconds at a known price. It's totally flexible. It's mostly passive, so there's no toilets, there's no tenants, there's no 3 a.m. calls. But if you hire the right property manager for your real estate, it's pretty close to passive as well. And I would argue that stocks aren't exactly 100% passive either because you should still be monitoring your investments. So there is time and energy spent on keeping up with the latest news and earnings reports. Stocks also have the lower price of entry. With stocks, you can start with just a few dollars. But with real estate, even first-time home buyers often need to save several $1,000s to make their first purchase. And the last benefit on this list is there's low friction. So near zero transaction costs, no maintenance, no management drag, and no realtor commissions when you go to sell. Now, as far as the cons of stocks, you have volatility. You can drop 30 to 50% in a downturn really quick, and the swings are constant and visible. It's also emotionally hard. The liquidity that is also a pro becomes a con, because if you aren't disciplined, beginning investors are prone to panic selling at the bottom. And the final con on this list is that there's less control and less tax flexibility with stocks.
So overall, you can see that there's a time and a place for both real estate and stock market investing. And ultimately, I think the wisest course of action is to be diversified in multiple asset classes. So to quickly recap, based on your personal scenario, at this very moment, stocks might be better than real estate for you or vice versa. If you're a beginning investor without a lot of cash to work with, stocks are probably the right choice simply because of the cost of entry. But if you're looking to reduce your income taxes, real estate is the clear choice. And as I mentioned at the beginning of the video, I've done well with both real estate investing and picking individual stocks. But a lot of that has to do with timing and finding the right stocks or the right properties to buy in the first place. So from my perspective, you can't just say that one is better than the other because they both have their time and place. And regardless of the overall markets, you can always find good deals on both real estate and stocks. But in some markets, you just have to look longer and be more patient. Now, I know I talk a lot about real estate investing on this channel because I am a real estate broker, but I do want to be as transparent as possible with all of you about the moves that I make in my overall investments. And I also think it's important that people are educated on investing in other asset classes beyond just real estate, because I do see a lot of opportunity in the stock market, especially with all the changes that are coming due to the advancements in artificial intelligence. So with that in mind, my focus will continue to be on real estate, but I'm going to start sharing more of my perspectives on how I invest in other assets as well. Because I noticed that most YouTube channels focus on just one at a time, and I truly believe that the real magic is in how they all fit together. So if that's something that interests you, make sure you hit the like button and subscribe for more. And let me know in the comments if you'd be interested in seeing my personal stock portfolio and learning what stocks I'm investing in right now. Anyways, thanks for watching all the way to the end, and I hope to see you all on the next video.